What's going on, everybody? David Figueroa here, live at InvestQ. And we do got a pretty special event today, something that a lot of people that are shareholders of BigBear.ai were, I wouldn't say anxiously anticipating, but we're pretty interested to see, due to the fact that there is a vote that is concerning a lot of the shareholders for BigBear.ai. But real quick disclaimer, I do need to let you know, unfortunately, I won't be just doing a live rebroadcasting of the audio or the stream for the annual shareholder meeting. Instead, what I'm going to be doing is I'm going to be listening in privately, and I will be taking notes. I will make sure that I take my notes. Unfortunately, it will be privately. I can't do it in front of you rebroadcasting the stream because... Sorry guys, 1 second. Mic check, my mic fell. But yeah, so again, big day, BigBear.ai annual shareholder meeting. And unfortunately, I can't rebroadcast the stream the same way I've done with other things on my channel, like the Castellum CTM annual shareholders meeting. That was a little bit different. I am just being a little bit cautious with the terms and services. So instead, what I will be doing is I'm going to be listening in privately, taking notes. And then later on tonight or tomorrow, I will be posting a full breakdown, which I will make sure I will be covering the most important takeaways that I read or that I saw, in my opinion, in my interpretation from the meeting, and any shareholders' votes, management commentary, and whether anything changed my investment thesis on BigBear.ai. So if you are interested in that, please make sure to let me know in the chat that you guys want to see that, and make sure you subscribe and hit the like button, because I'll have a complete recap after the meeting concludes, and I'll make sure that it comes out sometime either tonight. I'll do my best to get it out tonight. It'll either be out tonight or it will be out early morning tomorrow. Now, before the meeting starts, what it is we can do instead is we can talk about what BigBear.ai actually does and what investors should be watching, and has been what has given the biggest amounts of debate for BigBear.ai, and what investors are very concerned about. So first off, as me and you both know, again, BigBear.ai currently trading right below $4, currently trading at $3.97, a pretty big unrealized loss on the day. We have a 8% drawdown day, and shout out to the Prophecy AI app. Gemini has it with a 1-year bullish projection of a gain of 10.66%. Price target will be at the level of price level of $4.39. But back to BigBear.ai, all of you know that they are a company that is an artificial intelligence company that's focused primarily on defense, national security, border security, logistics, and intelligence applications. And unlike some of the other artificial intelligence companies out there that are focused on other things like chatbots or consumer-facing products, another thing that makes BigBear.ai a little bit different is they have emphasized a lot. They have made lots of emphasis on the fact that they are all about mission-critical government and enterprise solutions. That's what their main focus is on compared to other types of artificial intelligence companies. And a few of those major focuses, speaking on what it is they do focus on, is, as I mentioned, same thing I'm covering, or the same thing I'm talking about, which is defense and national security. Then you got intelligence operations, border security, digital identity, supply chain optimization, and logistics management. Also, guys, forgive me if I sound a little raspy when I talk, because I got my Invisalign in right now, so it might make me sound like I stutter my words just a bit. Just FYI there for you guys. But going back to BigBear.ai, enough about me and my stuttering problems. The company has several key platforms, and a few of those platforms that we know about are Ask Sage, which is their secure generative AI platform designed for defense and highly regulated environments. And they also have Conductor OS, which helps connect data and AI systems together in operational environments. And they also offer computer vision and biometric solutions through their Panjam and True Face technologies. Now, recent news, well, not too recent. It came out, this article right here, don't worry about that. Let me see if I can find it. Oh, I just had it up here somewhere. Let me see. But yeah, it's in relating to the Panama Canal. Let me just do a quick look on that. Panama contract. I covered a video on that, I believe it was last week. Let me see if I can find the CNBC article. Or no, on Yahoo Finance. Here we go. Let's see if we can find it right here. Just give it 1 second. It's going to just load up right here. So yeah, it's just this article. We've talked about it before on how it secured a foundational deal in Panama. And it was one of the more interesting developments recently. And this article came out yesterday on June 8th, but the actual deal that they made, it's been a few weeks ever since then, if I'm not mistaken. And what was announced in this deal was that the company announced it will deploy an AI-powered cargo security management platform with Panama's largest logistics operator. And the goal that they're mainly trying to accomplish when it comes to this is to improve cargo security. Oh, YouTube. Oh, yeah. So the goal is to improve cargo security, track shipments in real time, monitor fleet operations, and identify anomalies across the supply chain. Now, considering the fact that Panama is one of the most important logistics corridors in the world as of right now, investors, they're likely watching to see if this can lead to additional opportunities throughout Latin America. And why investors are watching this meeting, besides the news that we've had recently, is the fact that, let me check here. 1 second, guys. There's a problem with my stream, it appears. Yeah. Okay, should be good now. Let me know in the chat if it does show that there's any issues. But yeah. So anyways, YouTube is not. Okay. Yeah, but anyways, what's going on with this specific announcement, or with this specific annual meeting that a lot of people are focusing on? So a quick recap on what happened with the price action of BigBear.ai. So last week here on Friday, June 5th, we closed at the price level of $4.20 per share. And like many AI growth stocks, investors, they have been dealing with volatility and concerns surrounding future growth expectations. But the biggest issues heading into today's meeting is not necessarily concerns about revenue growth. That's not what people are really looking at and what they're concerned about. The main thing that they're concerned about, which a lot of people, you hear lots of concern about it in other growth-related AI stocks, is that one big bad word that's a no-no word is dilution. And speaking of dilution, the specific vote related to BigBear.ai and the concerns for dilution is the fact that BigBear.ai is the vote that's coming up is they're seeking shareholder approval to increase its authorized common shares from 500 million from 500 million shares all the way to 1 billion shares. And this proposal has become one of the biggest discussion points among investors right now. And it's important to understand the difference between authorized shares and outstanding shares. So a quick description for those of you that are new to investing. Outstanding shares simply means the shares that have already been issued and are currently owned by investors right now. And increased authorized shares does not automatically mean dilution occurs tomorrow. That's not the case. It simply gives management the flexibility to issue additional shares in the future if needed. And there's numerous reasons and numerous things that these additional shares could be used for. A few things that could potentially be that these additional shares could potentially be used for would be raising capital, potentially funding acquisitions, employee compensation, strategic growth initiatives. However, the concern is the fact that the concerns that investors have is pretty obvious. If additional shares are issued in the future, existing shareholders could see their ownership percentage reduced. And nobody really likes to see that. Investors don't like to see their ownership percentage go down. Almost everybody hates dilution. From me personally, how I feel about it, and what everyone else that has experience investing, everyone hates dilution. Now, as of April 13th, as of late, and anybody in the live stream can correct me if I'm wrong, as of April 18th, BigBear.ai had approximately 478.9 million shares outstanding. And that means that under the current authorization, only about 21.1 million shares remained available. So management is essentially asking shareholders for significantly more flexibility going forward. And I'm going to put it in the Q&A if you guys are interested. Oh. They need it to grow. Okay, that's how you feel. So I understand that that's your feeling towards it. And I'm not going to go out and say whether if it's right or wrong. But again, either way, there are people that are for it and for against it. Because the ones that are for it, I guess they're a lot less worried for the concerns about dilution. But the ones that are against it are. So everybody's going to have mixed back and forth opinions on what it is they vote for, authorizing those additional shares or not. So shout out to you, Miguel. And I want to know, do you personally, including you, Miguel, in fact, I'll put in the Q&A. 1 second. Let me do a Q&A for you guys. So I'll say, do you prioritize protecting existing shareholders from potential future dilution, or do you want management to, or do you prioritize, do you prioritize management having this additional flexibility? Hold on. I accidentally made this Q&A a little bit too long for you guys. This situation is the best, I think, and if we don't try. That is a good thought process to have. I do like that, Miguel. So I can see that you're definitely more in line with the company having the flexibility and approving the issuance of the additional shares. But again, not everybody thinks the same way that you do. I would say I lean more towards your thesis and your thought process. But again, everybody does view it differently. And also, guys, I'm trying to put a Q&A, but I actually made it too many characters. So bear with me one moment. Do you prioritize it? Or... Yeah, I got you. Actually, I know a better way to word this. Do you prioritize management to have additional or not? About here. This is the best way I can frame the Q&A. This is the best way I can frame the Q&A without it. I put in, do you prioritize management to have additional flexibility or not, and worry more about dilution? I was going to put, I wanted to put everything. The way that I wanted to word it was, do you want management to have additional flexibility to pursue growth opportunities, or do you prioritize protecting existing shareholders from potential future dilution? So Miguel, I could see that you personally prioritize management to have that additional flexibility to pursue growth opportunities. And when it comes to volatile stocks like BigBear.ai and other stocks in the defense sector and artificial intelligence, anything that is more of a risk on investment, and especially at something that is volatile at a cheaper price. And the thesis, or not the thesis, but the sentiment of the stock is they view it as something that's very volatile, kind of a wild card. And it's more of not what they're doing now with things like revenue or their financials or the fact that they're executing now. It's more about what people believe the long-term play for BigBear.ai and what it is they can accomplish in the future. So it's more about believing in the future of this company rather than what you're seeing today. So the thing is, you do need to have the stomach to be able to handle that types of volatility, and you do need to be able to stay calm, especially on weeks like this. Because if I take a look, how down are we this week on BigBear.ai? Let me see. So for BigBear.ai alone, let me just take a look at this real quick. BigBear.ai alone, over the past week, we have taken a dip of just over 16.12% over the past week. So let me see. Every bigger company, same category, have done the same in history. I agree with you. So that's one of the things I want to take into consideration. Again, shout out to you, Miguel. The thing about it is, if you do invest in a company that's already performing very well right now, and it seems like there's less risk on the table, my opinion personally, now you got to make sure that you look at the underlying business of any company that you look at. And that goes for me too, because I cover a lot of things like Castellum CTM, I cover BigBear.ai, I cover space stocks, I cover quantum. You have to look at the underlying business, and you got to look at some of the metrics. Like, for example, is revenue growing? You can check for profitability. You can check for backlog growth. You can check for cash and cash equivalents. There's lots of different things to take into consideration when you look at the 10Q or the quarterly reports and the 10K annual reports, and you look at all of the PR related to the company. Because on this channel, we never marry a stock, and we do not just invest into a company solely based on the headlines alone. What we do on this channel, and what I believe we do on this channel, is we like to look and do our own due diligence and do our deep dive analysis on any stock that we cover. And the thing is, if you're already in a company that's performing well and is surging in price action, and everybody else feels like it's a good deal to get in, it's usually not the best time to invest, because you're gonna be buying it at higher averages. You're gonna be buying in at a higher price compared to buying in at a discounted price. And if you look at the history of pretty much every company that's gone public on the market, as Miguel says, and not just because Miguel said it, but I do believe that what I do align with what Miguel said, his comment here saying that every bigger company has the same in the same category has done the same thing, in the sense that every company, especially in the startup process, as they're newer, they're going to have struggles with their business financially, and they're going to lay the groundwork for however long it takes for them to finally become successful and get all the eyes from institutions and investors to put their capital into whatever stock it is. Without me going on too much of a tangent, do you really think that there's a lot less people that were enthusiastic to invest in Amazon all the way back in 2000, in the early 2000s, right, compared to now? So why wouldn't that be the case for all these other companies in the AI sector that are growth stocks like BigBear.ai, for example? Now, quick disclaimer, this is not financial advice. I'm not telling you what to do. All I'm saying is do your due diligence, look at the underlying business, create a thesis on what is your reason for why you want to buy and hold BigBear.ai, if that's what you plan to do, and have the psychology to be able to stomach this high volatility that we're experiencing now. And don't panic sell. Obviously, you don't want to panic sell, but also, last but not least, and what's actually the most important, is have a defense system in place where you manage your risk accordingly, and you put the risk on the table. The amount of capital you're willing to lose, put it on the table, and don't invest more than that, is all I would say. And Miguel, you're on fire today, man. Appreciate you, Miguel, for all the support. I appreciate you a lot, my friend. Let's check out everything you're saying. So let's check this out. Shout out to you. No, No problem, Miguel. No problem at all. It's okay. Listen, I have some viewers of mine that are from Japan, and what I do is whenever they comment in my comment section, I'll translate it for them to where I translate it for them in Japanese and I send it over to them like that. So no worries about your English, the language barrier at all. First off, it's pretty good considering that English isn't your strong suit. So let me see what it is you're saying. Then I think it is positive if baby will buy BigBear.ai will buy other company and they can pay with own shares. It's possible that the company also thinks the shares will be worth more in the future. Okay. Again, you're one of the investors of BigBear.ai, one of the shareholders that are more on the positive, optimistic side of things. Again, not everybody thinks the same way as me and you do. That's all I got to say about that, Miguel. And I do like the mindset. Not telling you what to do with your capital, but it does sound that you are the type of person that can handle more risk, and you do have a long-term thesis, and you did your own due diligence as to why it is you bought BigBear.ai. Appreciate that, Miguel. Appreciate you. Now, again, if you weren't here for the beginning of the live stream, I'm very sorry, but I can't rebroadcast the whole annual share meeting. Let me just show you this real quick. So again, I just have to be very cautious when it comes to it because per the webcast right here, again, I can get in as a, let me see. Yeah, so unfortunately for two reasons, well, actually, no, I can get in as a guest. I'll be able to listen in on my own privately. But the only problem is I have to be cautious due to the terms and conditions. It was a little bit different, especially compared to the Castellum CTM annual shareholder meeting that I did. Like, most likely, I don't really even think that Broadridge, the people that are responsible for this, would even care that I did a rebroadcast. But I still need to be careful for any policies and worry about copyright and all those types of things. I have to be very cautious about it. I did highlight everything I'm going to be looking out for in the webcast that they're doing. But again, I just have to be cautious because where it says right here about, let me see. There's a portion in here that's talking about redistributing and rebroadcasting and just overall talking about, just things for copyright, all those types of things without getting in the nitty gritty. I just have to be careful with what I post out there. So what I'm going to do is I'm going to make sure that after I end this live stream, I'm going to be listening in privately. And I'm also going to be making a video either by tonight or tomorrow talking about everything that was discussed in the annual shareholder meeting. But real quick before I do go, does anybody else have any questions or anything that they want to make sure that I cover was mentioned or talked about in the webcast for BigBear.ai? Let me know if you do have any questions. I'll leave this live stream open for like another 2 to 3 minutes. And then I got to get into the broadcast myself so that I'll be able to listen. Again, if there's any questions, just let me know, guys. Any question at all. Let's check here. So, and Miguel, shout out to you, man. Oh. Okay, so of course, don't worry, Miguel. I'll get through the English barrier. No worry. But let me just read it. Let me read it out loud for you, man. So of course, it would be best if they don't. But we are not in this situation where we could choose if they need more money and cannot grow organically. If they pass the shareholder, okay. So yeah, again, the concerns with the vote specifically for approving those additional shares. In regards to approving those additional shares, again, a lot of people don't view that as ideal, especially because, the big bad word dilution. It's not necessarily ideal, but again, as you do say, we're not in the position of the company. We don't see what they see behind the scenes. So that is a good point to bring up. And how many chose the DI? I interest though to hear what other investors. Well, the thing is, technically, if you think about it, you're going to hear what other investors want to happen or would like to do, what they would like BigBear.ai to do in this situation. Because if you think about it, their vote is going to be saying what it is they prefer to happen. If there's more votes that approve for the additional shares, obviously people are okay with the additional shares being issued, and they want management to have more flexibility. If they don't approve it, then that means that they are too worried about the investors right now being diluted, and they can't grow. Yeah, so okay, sounds good. Hey, Miguel, and all of you that did come into the live stream, I appreciate you for attending. I'm going to be ending it now, and I'm going to be attending the live stream right now as a guest just to listen in. I am a shareholder of BigBear.ai. I am a shareholder. I've been a shareholder for over a year now, but I don't feel like finding my control number or where that was emailed. I'm not too sure. So I'm just going to enter in as a guest right now, and I'm just going to enter in all that info, listen to the webcast. And again, I'm going to take in all the questions and all the things that you guys wanted to hear into consideration when I make the video that I'm going to post either tonight or tomorrow relating to the annual shareholder meeting. But guys, thank you all for tuning in. I appreciate the support. And David with InvestQ out, and I'll see you on the next video. See you either tonight or tomorrow morning, guys. Stay safe.